Thank you so much for joining us. Thank you. Thank you. Okay. Well, excellent. Well, welcome, guys. Thank you so much for being on the call. Today, I wanted to share with you guys some of the things that we do with our right side platform. Obviously, you must have got an invitation from us in regards to this platform that we've been working on. Anybody who knows who I am, we used to work with a guy by the name of Derek, who used to have a software called the Magenta Trader software. Since then, Derek has moved on, no longer in the business and all that kind of stuff. But quite frankly, what we did was we tried to take some of the concepts that we learned from that and create what you are going to be seeing here today, but with some major improvements based on my style of trading and how we use quantitative and technical analysis to decide what the market is doing and helping us stay on the right side of the market. So we have an hour. Unfortunately, we can't go into too much details. I mean, again, my goal is to try to at least kind of enlighten you to see how this can help you with your trading if you're interested, and then kind of go from there. But I hope that over the next hour, I can shed some light on how to use the software to help you with your trading in particular. Okay, so that is what we'll try to do. And so for that reason, I do apologize if you hear this buzzing noise in the background. My neighbors are out here doing some renovations to their homes, and so you'll probably hear this buzzing sound in the background every once in a while. So I apologize for that up front. Okay, very quickly, our risk disclosure statement. Again, this is not we're not licensed financial advisors. Okay, I am not. I am simply just a guy who is sharing with you some of the things I've learned through the stock market and what I'm doing and what's helping me with the stock market. So please make sure that before you do anything, you consult the advice of your licensed financial advisors. Does that make sense? Okay. All right. So that being said, today, how we invest better using the right side platform to improve our entries, to improve our exits, and especially to help us with seasonality timing. This is the main feature that I guess I would like to highlight. But before we go into that, I want to show you how the platform works in a sense, and then talk about how to use this with seasonality. And anybody who knows seasonality, I don't know about you guys, but one of my biggest challenge with seasonality was, it might sound good that a stock has moved a certain percentage for the last 10 years during a certain period of the year over and over and over consistently, but there's no guarantee that it's going to do it again this time around. So even if it's done it 10 times in the last 10 years or 9 times in the last 10 years, how do we know that it's going to actually do the same thing again this year? And so because of that, I've seen a lot of people who understand the concept of seasonality, but has not been successful with it because seasonality had that challenge of, is it actually going to happen this year or not? And so I'm going to show you some of the things that we did to help us improve that and why we're very, very excited about sharing this with people nowadays. Okay. So that's what we're going to do today. All right. So a little bit about myself in the event that you don't know who I am. I am the chief technical strategist over here at Right Side Trading, being in the accounting and finance industry, as well as investing, real estate, and all that kind of stuff for about 17 years. In the last 8 years, when I decided to focus on the stock market, especially after the financial crisis, I really got involved in understanding the markets and, in particular, studying technical analysis as well as what is called quantitative analysis. Now, quantitative analysis is not something that a lot of people know about, which I think it's a huge plus if people understand that. And so, anyways, that's what I do. All right. Prior to me focusing solely on technical and quantitative analysis, I was a financial statement analyst, and so I worked for a mergers and acquisition company, where my job was to analyze the financial statements of companies that they were looking to acquire and give them my recommendation as to whether it was a good company or bad company simply by just looking at the financial statements. And so I took that information as well and brought it into the stock market to help me understand what companies were good and which ones were bad. And that's when I also discovered technical analysis. So merging all that together is what my experience is right now. Okay. And so I took all that information and now I use it to specialize in identifying good companies that are trading at attractive prices, excuse me, with minimum risk and huge profit potential. Okay. And so most of our focus is strictly on patterns in the market, especially on the major indices. We focus on ETFs. We do that a lot because we use the ETFs to kind of give us an idea of where the market, like where the opportunities in the markets are going to be. So when we start seeing through quantitative and technical analysis that certain ETFs are beginning to move, we know what stocks to focus on. Also, we like focusing on stocks that are IPOs, dividend stocks, earnings, and so on and so forth. So that's kind of like a little bit about my background and what I bring to the table. So let's just go ahead and talk about a little bit more stuff. Last year, I showed this because we, because of what we do, we were able to identify stocks at low, like I said, low attractive prices that ended up going to all-time highs. And so last year we did about, our goal was to do about 60. We wanted to get involved in 60 stocks that we could buy at that lowest price during the year and then hold on to them till they reach all-time highs. Our goal was to do about 5 of them per month. So for the year, we were expecting 60. We ended the year 2020, even with the pandemic before, because we set this goal before the pandemic. We ended the year with 98 of them, which was extremely successful. And then this year, we decided since we did 98 last year, we decided to see if we can go for 100 of those. And thus far, we are at 75 at this stage right now. We're at 75 at this stage. So we believe that we'll be able to reach our goal of 100 stocks by the end of December. And so I'm going to show you a little bit about what we do and what we focus on to kind of help us accomplish this task and how this platform is going to be able to help you too as well. Okay, so this is just more of those stocks. You can go back and look at most of these stocks. You'll see that they went from a low to all-time highs all in 2020, I should say. So here's the thing that we discovered. The first thing is we wanted to understand setups. What are the setup that tells us a stock is at a low price that is attractive? It's not going to keep on going lower, but it's ready to rally higher. And we found that we can consistently find those type of setups. Second was that we wanted to know when should we start buying this so that we're not the type of people that want to see stuff in hindsight. We need to be able to see it when it's actually happening. And then the third thing is how do we stay on the right side of it as it keeps on rising to all-time highs? And so what we discovered was that the identification of a new uptrend is actually easier than most people think. And one of the reasons why we were able to discover this is through the quantitative analysis that we learned from a guy that I'm going to introduce you to very soon. But his concept was the stock market was not random. And so when we realized that the stock market is not random, we were able to start focusing on how do we identify these patterns, okay? And the guy's name that I'm referring to is a guy by the name of Jim Simons. I'm not sure how many people have ever heard of Jim Simons, but I highly encourage you to go learn about Jim Simons. Jim Simons is a quantitative analyst. He uses technical analysis as well. But one of the biggest things that I liked about him, and when I heard about him and what really helped me to like build what I am presenting to you today or going to present to you today, was that Jim, he's a multi-billionaire, by the way. He was a mathematician by trade, and he realized that he could apply math to identify certain patterns in the market. So then he hired mathematicians, he hired statisticians, and he hired physicists to help him build this model that he now uses. And this model is so secretive that he would not share the secret to his model with anybody. And so much so that anybody that works for him has to sign a very ironclad non-disclosure statement that they would not reveal his secret. Okay. But so because of that, I don't know exactly what his model does, but in many interviews and many presentations and speaking engagements that he did, when he talks about how he approaches the market, he talks about how the stock market is not random. And one of the biggest things he mentioned was that patterns of price are not random, even though they might look like they're random. And that to me was huge because once I realized that, I said, look, nothing is random in the stock market, which is very contrary to what I had learned prior to that, was that everything is by luck, it's by chance, it's gambling, it's speculation, it's all this stuff. But Jim Simon says from what he discovered, it's not random. And there are certain patterns that you can actually see. And he used that. I mean, this guy was doing this back in the 1980s and up until now, and he turned it into $1 billion industry firm. But he said what they do is they focus on searching through historical data and they look for patterns that they know will not occur at random. Meaning that if it was to occur at random, he doesn't want anything to do with it. And that literally was a genesis of what we decided to do. And even though I didn't know his exact model, that was enough for me. That was enough seed to tell me, let me go see what are some patterns out there that we can rely on consistently, that we know when we see them, excuse me, when we see them, we can be assured that certain outcomes are actually going to take place. And so it was because of that that we created the Right Side platform. Okay. So here's an example of, if you were to look at a chart, most people will look at this chart and have no idea, what to do. In most cases, people will tell you in hindsight, you should have bought here, you should have bought here, and all that kind of stuff. So what we did was we took that same information and said, how do we then use this to help us anticipate and see patterns as it goes forward? Okay. That's one of the biggest things that we wanted to do. So what I'm going to do here is, for time's sake, what I did was I went back to 2013 when I first started trading, and I looked back because in 2013 I was actually short in the market, because a lot of the news that I listened to back then was telling me short, the market was going to crash, we're in a big bubble, which is kind of like some of the things you're hearing today. By the way, we have a way to tell whether or not we're in a bubble or not, and I'm telling you right now, we are not in a bubble. Okay, but I'll just leave it at that. But needless to say, 2013, I was brand new into the market, and everything I heard was bubble, bubble, bubble. And sometimes I wonder whether we attract what our fears are, right? Because my concern was, how do I make sure I don't lose all this money? So a lot of the news, a lot of the things I paid attention to was anybody that talked about a bubble. So it just seems like everything around me was all about a bubble. And so because of that, I shorted the market, and I listened to all the experts out there said you could make more money shorting the market, which I did follow. Long story short, I blew my portfolio 3 times in 2013. And after the year 2013 was over and I had blew my account the third time, in 2014, I went back and said, man, what did I do wrong? And I went back, and all of a sudden I just looked at this chart. I was like, wow, in 2013, the market went up, right? And the whole time I was shorting, I mean, I made some good profits here and there, but overall, net, I end up losing and blowing my account 3 times. And when I look at this chart now, I say, wow, it makes so much sense. And so it took me to about the end of 2014 to really start saying, what is it that I'm missing based on what Jim Simons is saying? And so we started doing some research, and I realized a number of things. One, this concept of it's not as difficult as it is if you look at this chart, all these areas where I highlighted right here, all these areas that I highlighted, what's the one common thing about them? And that is, in an uptrend, right? An uptrend consists of higher highs and higher lows, correct? So we have these higher highs and higher lows that are taking place. And the idea is, wait a second, what if all we did was just focus on the higher lows? Okay. If all we did was just buy the higher lows. And so that really changed a lot of things, because I started saying, wait a second, maybe I don't need a trade every single day, but just wait for those higher lows. That was the first step, but we'll get into when do we know it's time to start buying? When do we know that higher low is over? Okay. But the first key was, again, if all we did was just focus on higher lows, when these higher lows are set, and only buy when they're higher lows, we can do well. And so I want you to see, this was 2013, that this is not coincidence, like Jim Simon says. It's a pattern that occurs over and over and over. And if it doesn't happen, we're not interested. So that means that if a stock is up here, we're not interested. When the stock is up here, we're not interested. So for that reason, we realize that we never buy stocks when markets are at all-time highs. Never. Okay. We know that that's just not good practice, so to speak. All right. So what we do is we literally wait. And this is where the challenge comes in, because some people's like, wait a second, so are you going to wait a whole month and a half, a whole quarter before you actually get into a trade? And the answer is yes, we would wait for those type of setups. The good news is we can go to different stocks and find the same thing. But the one thing we told ourselves is never buy a stock that is at all-time highs. And I cannot tell you how much that has saved us from getting ourselves into a lot of trouble. And so a lot of people like to trade breakouts. So they'll see something like this. Oh, you see, we have the breakout, like trade this. No, we're not interested. Now, it doesn't mean that breakouts don't work, because somebody would have bought this and it would have worked for them. They would have traded this breakout. It would work for them. They would have traded this breakout and it worked for them. But we realize breakouts are not what we're looking for. Okay. And that kind of goes back to what Jim Simon says. We want patterns that seems like it's random, but in actuality, it really isn't. Okay. So much so that if it is random, we don't want it. Right? So that was the first thing that we said. Now look at 2014, the same thing again. You know, you see buy low and get out up here, buy low, get out up there, buy low, get out up there, buy low, get out up here, buy low, get out up there. That is literally what we're trying to do. 2015 was a lot choppier. I remember 2015 very well, very choppy, but still the concept still apply. Buying lows, with higher lows, okay? And so that's kind of like what we want to be able to do. Here was 2016, you can see the same thing. 2017, same thing. 2018, we can see all these buy lows. And 2019, right? Then last year, during the pandemic, same exact situation happened. And then here we are in 2021 with the exact same thing again, okay? And so that's all we realized is like, wow, learn how to identify these bottoms, buy low, and we would do fine. Okay. Now I'm just using the S&P as the one example. Again, this is just one stock. The idea is you could go to so many different stocks and do the exact same thing on those stocks. Does that make sense? Okay. So now let me introduce you to these platforms so that you can kind of have an idea of how we then took that concept of how can we tell when a stock is at a low, the new higher low, and then start buying that. And this is a screenshot. I'm going to show you the actual software pretty soon. But here's a screenshot of the platform, okay? And the first concept is how do we identify that the beginning of a new trend is actually started? That's what we wanted to do. And so what we factored in and through the algorithms that we program into it was, first thing I wanted to do was say, okay, are we bullish or bearish in the market? And so when you see this green background, this whole green background right here, this lets us know that the overall sentiment of that stock is bullish at this stage, okay? And so the idea is, okay, we want to get in as early as possible when the bullish trend begins. Now, this right here that is all red tells us that what? It is bearish. So we know it's bearish at this time. So if we see a red background, or pinkish salmon-ish reddish background, we know that it is bearish. And then when it turns green, we know that it's bullish. And so in this case, that's the first thing that we're looking for is, are we dealing with a green background, a red background, or a green background? That's the first thing. So our goal is to make sure that we want to see a red background. That's how we know we're dealing with a pullback. And then once we see that red background, as soon as it starts turning green, we know it's time to start jumping in, that we know the new trend is beginning. And this is literally how we're able to spot this new trends every single time as it is happening, not in hindsight. We want to be able to see these things as it's happening, okay? So that's the first thing. The second thing is being able to consistently buy low, okay, that pre-all-time highs without having to guess. That was our next thing. How do we make sure we buy this? Okay, we know we're dealing with a low or a pullback, but how do we know it's actually time to start buying? And this is a good price to be getting into before it reaches new all-time highs. And so for that, I'm going to show you this again. And again, we'll go into the platform itself so you can see this. But recall what I said. We have a green background, then we have a red background. We want to see that pullback. We want to see that red background first. Once we see that red background, we know, okay, good. Things are getting, and then right when it starts turning green again, we know that it's time to get in. But to make sure that we are actually buying at good, low discounted prices, we have something that we also factored in, another algorithms that we factored in. based on price data, historical price data. And so like when this stock has had good, and this is where the quantitative analysis comes in, by the way, it's like in the past when it had a new trend, around what price rate, percentage wise, all that kind of stuff was a good price to get in where you know you're not chasing the stock any longer. And so that's what this does for us. And in this case, our goal is to make sure that we are buying when this turns green. That's the first thing, it has to turn green. And then we want to make sure that the candles or the bars are in the lower section of this three lines right here in the lower section. So this is the top line, the middle line, and the bottom line. So we want it to be in the lowest section. This is what we call the harp line, right? That's what you see right here, the harp line. We want to make sure that it's in the lowest section of this harp line. And that tells us, okay, you're still getting it at a good price, okay? Once it starts getting above this middle line here, now it's saying you're probably spending too much, especially if you expect it to reach all-time highs. And so that's one of the other things that we try to make sure we factor into this, okay? And then the last thing is once we know that we're in the vicinity where we want it to be, we look at this right model, which is also based on quantitative analysis. It says, look, is this time to start buying? Okay, and the buy here means that it's time to go long. The cover means that it's time to cover your short position. So if you were short in this, you definitely want to be out of this trade. You need to cover your short, basically exit your short positions. So we've factored all that quantitative analysis in there as well to kind of add to the element of more data, more information to let us know if this is ready to do something. And then lastly, how do we tell when it's time to get out and make sure that, you know, we can cut our losses early, ride those winners, staying on the right side? Very simply, you know, again, it's one of those things where it's like, once it's bullish and it's green, we stay in, stay in, stay in. We know a number of things. If it turns red, we know something is it's going wrong. We need to be out of it. The other thing is we look at this right model. Once the right model starts saying sell short, sometimes they would tell you to place stops and so on and so forth. Those are kind of things that tells us, wait a second, this is not, the bullish trend is struggling at this stage. And so we're able to get out before it turns completely against us, okay? And so we have used that to enter trades like Tesla back in 2019. We used this when Tesla somewhere down here was telling us it was ready to go. We used that to, you know, really do well on the monthly chart of Tesla for months to come. We did the same thing with Dunkin' Donuts, and this is one of my favorite ones because especially during the pandemic, you know, the market had gone down, pandemic came. Dunkin' Donuts was one of those stores that remained open, and it was kind of cool to see that and hold on to these stocks until they got bought out. GRACO, I call it GRACO, it's GRACO, I guess that's what it is, but it's the car seat company for babies and stuff like that. Same thing, you can see how, you know, all this right here were all stocks that we ended up dealing with, okay? This one right here, RH.com, most people are not aware of, but a lot of people gave Warren Buffett a lot of hard time because of his airline stocks. But when he mentioned that he was buying this RH, I took a look at this using the platform. I saw that it was good. We got in. You don't hear them talking about RH. RH has done phenomenally well. I mean, phenomenally well. Okay, we bought it like around 175, and look at where it is today. Okay, Starbucks was another one just like Dunkin' Donuts. Eli Lilly was another one just like that too as well. And so before we ask the questions, so let me show you the platform so I can show you what this does. So here is the platform right here. Okay, so on the left hand side we have, you know, three things, and we're gonna have a for those of you guys who decide to take advantage of it, next week Wednesday we'll do a full, you know, onboarding tutorial on how to use the platform. Okay, but just to kind of show you what this can do, this is what I'm talking about. Notice how the market is now turned down recently. Okay, so this is exactly what we're talking about. So what this tells us is, wow, we've now enduring a pullback. Most people question, wait a second, is it a pullback? Is it a full-blown reversal that's going to turn the market upside down? And the answer is, for now, we treat it as a pullback until otherwise. But you can see right now, based off of this, one of the biggest things we're looking for now is for this to turn green, like we see here. Okay, that's the biggest thing that we're going to be waiting for now. Once we see that, whenever that happens, whether it's tomorrow, whether it's next week, whatever day that happens, we'll see that and we'll know, yes, the new bullish trend is beginning. Okay. And that's what we want to see. So it's very similar to what happened back in July. Excuse me. I want you to see something actually right here when the market was actually going down. Notice what it said right here. It says, wait and hold, get in short or get out, which is very interesting. So we put that in there to let us know, look, something is not right with this market. So it's either you get insured, meaning that you place your stops. If you're the type of person that doesn't mind buying put options to protect your stocks, you do that. But it's basically letting you know you need to do something, or you need to get out of this trade completely, right? And then the stock dropped, okay? And then right here, you'll notice it says sell short. And even though it said sell short, there's some things that I'll show you, as we go more into this. But let's just assume that you actually sold short just based off of that alone. The very next day, notice what it said. It says exit your long position, means that you should not be going long just yet. But the one thing you want to do is place your stop on your short positions. You guys seen this? And what I'm referring to, just so you know, is this data up here. I want you guys to see this data up here. So it says sell short there. Right here, it told you get out of, place your stops on your shorts. The very next day, you would have been stopped out, but then look at what it also said, buy cover. Now, this is where we know it's time to start buying. Now, you can't see the green and red background because this green and red background, we only have it do for like, 30, 35 days, no more than 45 days. And so you don't see that now. But back then, it is literally when it turned green, and then it stayed buy cover, and then it says wait and hold, meaning don't buy, don't sell. You don't need to get out of your positions. All right. Most people would have seen this and say, oh, we're at all-time highs, let's short this, but that's not what this is saying. It says hold on to it, hold on to it, hold on to it. And notice how I kept on saying hold on to it. And so like on this day where it became very volatile, by the end of the day, it says, no, you need to wait and hold on to that. And then the next day, wait and hold on to this. Even with this big drop, most people would start panicking and saying, wow, it's going down. But guess what it said? Hold on to it, right? And it kept on saying that up until right here. Notice what it said on this green candle here. Long stop, exit your short position. So in this case, the biggest thing is we were bullish all this time. And so the most important thing is nobody should have been shorting anyways, because all this time it was never telling us to short the stock. But right here, it says long stop, exit short, meaning that place a stop on your long positions. Okay, because he knew something was not going well. And then the very next day, get in short or get out of this market. So we had 2 days to get out of this trade. Either we got stopped out or we just say sell everything. And then the very next day, it dropped again. Okay. And then this is where, again, a lot of people were panicking. Oh my gosh, the market is going to go crashing down. Based on the data that they had right there, said, look, this is the time to short. But the very next day, same thing again. It said, wait a second, this market is supposed to be going down, but data is now proving that it's ready to go back up again. And so it says, exit your long position just yet. Don't go in long, but place stops on your short positions. Look at what happened. As soon as it turned bullish again, it came with a buy cover. That was our clue to start buying. And this was literally last month. Okay. And so last month, it gave us 2 days, buy cover, buy cover. By this day, we were already at all-time highs. And so remember what I said, once we reach all-time highs, we don't want to be involved anymore. And so that's why you see it says wait and hold, because at any point in time, it can reverse. But rather than guessing and hoping and wishing, one thing we do is we just come back to the platform every day and say, what is it telling us to do? And so the very next day told us to wait and hold. The market was volatile the very next day with a red candle. It says, no, wait and hold on to your positions. Same thing over here, wait and hold to your position. And all this, every single one of this, even with this one too, wait and hold to your position. And so this is one of those situations where in the morning you see the market down pretty big, but by the end of the day, it's bullish again. And people was like, wow, this is choppy, market's not going anywhere. And I was telling people, I said, look, the reason why we want to be on the right side, and notice how this keeps us on the right side, and that's the reason why we call it right side invested, right side traded. The reason why we call it right side is because it's keeping us on the bullish side of the market. That's the right side to be on. So even with all this choppiness, all they were saying is hold on to your positions, just wait. Wait meaning if you're not in, don't jump in now. You already missed the boat on this one. But you already have positions, just hold on to them. Don't panic, don't sell, don't do anything. Just let it keep on growing. And that's what we see here. Wait and hold, wait and hold, wait and hold. And it kept on doing that, up until yesterday. Look at what it says now, yesterday. Get insured or get out. Okay. Now, we are actually excited because this is keeping in patterns that we expect it to do. We expect this to happen every so often. And so we were waiting for this to happen. And then now that we see it, we're excited. Now, we're not short in the market because the overall market is still bullish. How do I know that the overall market is bullish? We like to see what is happening on the bigger time frames. And so in this case, what I'm going to do is I'm going to click on the monthly time frame and say, okay, what is the monthly time frame telling us? And right now, the monthly time frame is still bullish with no signs of, place to stop or anything whatsoever as far as this is concerned. So we know that everything big picture is okay. And so we know that big picture, everything is okay. We don't have to concern ourselves with, hey, let's short the market. That tells us that all we have to do is these are going to be temporary pullbacks with the expectation that it should not take out this low. Does that make sense? Because again, remember, we're looking for the swing highs. And so same thing right here. If this was the swing low here, this was what happened here. So as long as it doesn't take out this low, we consider this a pullback literally up until the day it crosses this level. If it crosses this swing low, then we're dealing with a reversal in the market. But the good thing is we've already been told, get out of the market. So this is not, oh, we holding on and watching our trades keep on going down, 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 down. That's not the case here. The case here is we know that this is the swing low. So any drop here up until this point right here is considered a pullback. That's all it is, a pullback. This is not a reversal. A reversal would not take place until we take out the low, the swing low. And so there's a lot of people that'll be looking at this level and it's like, no. The beauty of this is we now know that where the swing low is simply because this was the last red circle. And so whenever this turns around, we know that that will be the next swing low. So we don't know the answer to that just as of yet, but the beauty of it is we know, like whether it's tomorrow, like I said, or anytime next week, whenever that comes, we'll see this turn green. Does that make sense? And once this turns green, we know that, wow, the swing low has been set. It's time to jump back in. As of today, notice what it says. Exit your long positions and place stops on your short position. So at this stage, we should not be long in the S&P 500. This is the SPY. We just should not be long, going long, meaning owning shares that we are trying to buy. Nobody should be trying to buy, which is another thing because I hear a lot of people say, oh, the market has dropped. Let's buy some more shares. No. You don't just do that. We wait for that swing low to take place. Does that make sense? And so because of that, we now know when to get in, when not to get in, and so on and so forth. And so that's one of the coolest thing about this. No guessing, hoping, or wishing. We can just wait for that to take place. And we know that as soon as it turns green and it shows a buy cover like it did right here. Notice how I had a buy cover on this right model when I moved my mouse to this July 21st. Once that happens, bingo, I know it is time to go. Okay. So this in of itself, just understanding when to get in on the swing lows, buying swing lows, that is literally how we were able to trade and get into over 98 different stocks that we got into last year. Okay. So if I go over here, when I showed you this right here, all these stocks right here, it was literally based on the same concept. The only thing we did was we did most of them on the weekly and monthly charts. All right. But it didn't matter. But every single one of these stocks were stocks that we traded last year to help us reach our goal. And right now we're doing the same thing with the stocks that we're in currently. Okay. All right. So let me do this. The next thing I want to show you is this concept of seasonality and why this has now really helped change the game when it comes to seasonality. Again, for those who might not know what seasonality is just simply historical data that tells us in the past 5-10 years a certain stock has gone up around this period of time. Okay, and it'll tell you what it's done. And the idea is, if we know, like, let's say, for instance, let me use 1-800-Flowers, for example. Every January through February, it goes up. Why? Because people are anticipating Valentine's Day on February 15th. And so if you look at the chart of 1-800-Flowers for the last 12, 15 years, somewhere towards the end of January to right either the day before or a few days after, give or take, on Valentine's Day, you will see 1-800-Flowers literally rally. Okay. Now, again, it's not always a smooth, straight up rally, but you have a safe bet that if you bought in the last 15 years, if you bought January 31st and held to February 15th, February 16th, February 17th, you would have made money on 1-800-Flowers. That's seasonality for you. Okay. But every single year, the next year, we know Valentine is going to come again. But the thing is, there's no guarantee that it's actually going to work this time around. So what if it doesn't work this time around? That's what we want to be able to identify. Okay. And so a lot of people understand seasonality. The problem is, what if it doesn't work this time? And so I want to show you the example of GDX gold, whereby it has a seasonal pattern of going up in the month of July through September. Okay. But if you notice what's happened here, this is the month of July. The stock really didn't go up in the month of July. And here we are now, literally in August, and it did not do what it was supposed to do from July to September. It just didn't. So anybody who was looking at gold and trying to get involved in gold and saying, hey, wait a second, I know it has a seasonal pattern of going up from July to August or during the summer times, what they would have found is that they would not have been making any money. Okay. And it didn't work this time around. So how could we have avoided that? How could we have avoided it? Hey, Mark, welcome. I just saw that you joined us. I'm not sure. We started about an hour ago. Well, actually, I'm sorry, not even an hour ago. We started at 7:30 Eastern time, so almost 50 minutes ago. But I'm glad that you're here, or maybe 40 minutes ago. But I'm glad you're here. Okay. So I have this recorded. So in the event that all the stuff we covered earlier leading up into this, you don't understand, when you watch the replay, you'll understand what we're talking about. But right now, we're just talking about the seasonality aspect of how to use our platform to help you become better at seasonality. Okay. And so the idea here is, you can see very clearly in the last 10 years, seasonality says that it should go up, but the stock did not. So this is where I said, look, just because it worked in the past, this year it did not work. So how could we have prevented ourselves from jumping into this seasonal stock that was not going to work this year? Okay, hindsight is always 2020, but when it's actually happened, how do we make sure we're not jumping into stocks that seasonally is not going to work? And so let me show you the price chart. So that was in July, beginning of July. I want to show you this. This is the beginning of July. Now I want you to see what the right model was saying during that period of time. Okay, and so you can't see the green or red background right here, but during that whole time, it was red. Okay, I'll just let you know it was red. But notice what it says: wait or hold. So anybody who said, wait a second, July, gold should go up, it's true based on historical data. Now the question is it going to do it this year? And so here we were in July waiting for gold to go up. And then we wait, and we saw what it says: wait and hold. It says, okay, we'll wait and hold. Let's wait for the next day. The next day came. Look at what it says: get in short or get out. It's like, wait a second. No, this is supposed to be going higher, not lower. And then the next day, get in short and get out. The next day, you get in short. So after a whole week, it never gave us an opportunity to say, now is the time to jump into gold. And so that was our first clue to say, wait a second. All right, let's give it one more week. Maybe sometimes it could take, give or take, a week or two, delayed process in there. So I said, okay, well, the good news is at least we didn't just jump in, which is one of the biggest mistakes I've seen a lot of people make. They have calendars that tell them, oh, from July 1st to July 30th. And so smack on July 1st, they go in and start buying on July 1st in the anticipation that it's actually going to start rallying. And then they hold on, and they can't get out of these trades because they think to themselves, well, the data says that it's supposed to go up. So let me just hold on to it. Let me hold on to it. And especially those who are trading options And the next thing they know, the trade didn't work out, right? And they spent all this time where it did not work out. And so in this case, what we're doing here is we're saying we don't have to guess when it comes to seasonality anymore. We can have that pertinent information up front, but then we can tell whether or not we can actually start buying. Okay. And welcome, Dave. I see you also coming in. Welcome, Dave. So in this case, from July 1st, when we knew or expected or anticipated that the seasonality says it should go up, the platform says no. Using the quantitative technical analysis data that we have, said nope, it's not ready to go higher. And so we waited. And so all this time is saying get in short or get out, get in short or get out, get in short and get out. And then it seemed like the trend was getting ready to change. But notice what the right model said still. I say, wait a second, the trend seems like it's getting ready to change, but there's still not enough data that says that this stock is really ready to go higher. So it says, look, get in short or get out. Next day, same thing. And then the day after that, it turned red again and says, look, get out of your long positions. I mean, it's been telling people, get out, get out, get out. But right now it's saying exit your long positions, and then what happens? The stocks drop, okay? And then the whole time that is red over here, we know there's no way we can even, this is not bullish at all. This is all bearish. This is all bearish. And so again, if we go to the seasonality was saying, no, it's supposed to go up. It was supposed to be going up on June 30th, and it's still supposed to go up, supposed to go. Here we are on July 29th, and nothing is happening. The stock is just not doing what it's supposed to do. And we were able to save ourselves from getting into a seasonal stock that just would not move. Now, I want to show you something here. Then a great news came out, all right, and gold gapped up. And so we said, wow, great. Now maybe it's time to start buying. I want you guys to pay attention to this now. Now it's time to start buying. Now, by the way, it's already July 29th. Our seasonality says it should have already started back on July 1st. But okay, give and take, July 29th, maybe it's going to give us this rally right here. All right, good. So we're still able to catch something out of this, okay? So now we go back to the chart. On July 29th, it says buy. Good. And so now we start buying. The very next day says buy. Okay, everything is fine. Wait and hold. That's okay. Everything is still bullish because we know the background is bullish. Everything is bullish. Wait and hold. So basically just saying, look, don't buy anything, but you don't need to sell either. Just wait and hold, right? But there's a problem here. This stock is supposed to be doing what? Going higher. It's not. So it's saying wait and hold, wait and hold. And then right here, look at what it says. We still have a bullish trend, but it's saying, I think you need a place to stop on your bullish positions, on your long positions, okay? Now, keep in mind, seasonality all this time was saying it's ready to go higher, but at this stage, yes, we bought it here, and yes, we might have a place to stop here, and then the very next day, look at what it says. Exit your long positions, guys. Get out of your long positions. Get out. Why? It's just like what Jim Simon says. The stock market is not random. It's not. The only difference is we've learned to identify certain patterns, and now the computer is able to help us find it so much faster to let us know something is not right. And this is where, again, somebody who had been in trying to trade seasonality the old-fashioned way would have been buying this way back here, only to see that it's not going anywhere. Try to buy it again, thinking it's going, and we probably would have bought it here too, okay? But then very quickly would have had a stop in place, which would have been stopped on the very next day. Or even if we didn't place a stop, look at what it's telling us here on the right model. Exit your long positions. Exit your long position. That means get out of your long positions. And because of that, it prevented us from having to deal with this, right? And then now everything is turned bearish again. So rather than getting upset at seasonality and saying seasonality doesn't work, what we realize is that people are not paying attention or don't know how to identify certain patterns that says, look, money really truly is flowing into this stock around this time. And so because of that, we're able to prevent ourselves from jumping into a trade that was not really ready to move. Does that make sense? And this has changed things tremendously. We now know which season, like we can watch a seasonality stock, we can pay attention to it, we know when it's ready to go, and then we can say, look, these are the ones we want to buy versus the ones that we don't want to buy. Okay. I'll show you another example. 1-800-Flowers. This is 1-800-Flowers right here that I talked about. Okay. You can see right here, because we are now, you can't see what happened in January, February, because this line right here differentiates the last 6 months. So this is the previous 6 months. And then this is the next 6 months. So we can't really do anything with information from the past. The goal is to focus on what's going to happen here. But you can see this right here. All right. If I bring my cursor to this place, this is December, end of December. So starting end of December, you might want to start paying attention, or not end of December, but mid-December, end of December, you want to start paying attention to 1-800-Flowers. Okay. But the other time 1-800-Flowers tends to rally is during the summertime, right here in July. Okay. And we can see this again. It's supposed to go higher, but we can very clearly see what did it do? It went what? It actually went lower, tried to go higher, went sideways, and it's just not. And then now we can see that it's supposed to do what? It's supposed to go lower, which is what it's doing right now. So let's take this in two cases. First is let's see what it was supposed to do in July, end of June, beginning of July. And then let's see what it's supposed to do going forward now. Okay. So we know based on this, it's supposed to go down. Let's see what the chart is telling us. So here we are in July, beginning of July, right here. Okay. I want to show you again. We had a big green candle. Most people would have seen that. That would have been all over the news that day. Oh, 1-800-Flower, one of the top performing stocks for the day. People start thinking, wait a second, seasonality is about to start. It's time to get in. But notice what the right model says. Wait or hold. Okay. And then it's okay. Very next day, and some people at this stage, I mean, even people who know candlesticks, oh, this is a, bullish engulfing, bullish around, whatever the candlestick signal might be, they'll be focusing on that and saying, yes, it's ready to go. And maybe you'll say, okay, we need confirmation. You didn't get confirmation. But the cool thing was it says wait and hold. And then the next day, exit your long positions. Just wait a second. This is not going in the direction that it's supposed to go. And so on and so on. And here we go, sell short. And then now this all is bearish. That's not the trend. So we could very easily see this is not the beginning of the trend that we want to see. We were expecting this to be bullish. Why? Because the seasonality says it's supposed to go higher, not lower. So if it's supposed to be bullish, why is it that we have a red background? So that's the easiest part right there. Just to look, you know what? It's not even ready to go. Okay. Then now, here we are, where it's saying, look, it's supposed to do it, start going down. This is what it's showing. It's supposed to start going down. Okay, great. What is it telling us right now? Okay, so the first thing I can see here is we are dealing with a bearish situation. Great. It's bearish now. This is what we want to see because that's what seasonality is telling us to do. So the only difference now is, look at what it says, sell short. Isn't that what we want to see? We want, so 3 days ago, or today, yesterday, what's today's date? Today's Monday? No, today's Thursday. So if this is Thursday, this is Wednesday, this is Tuesday. So on Tuesday, it was saying, yep, it's time to short. Now notice over here, all this time when it was bullish, it's like, wait a second, maybe not, because this is supposed to be doing what? Going down. We have a bullish, so you wait, you wait, Then notice what it's saying to all those bullish people. Get in short or get out. So maybe that could be a good sign for us bearish people now. It's saying, it's telling the bulls to get in short or get out. So let's see what happens. It's wait, don't do anything. Now it's telling, get out of all your long positions. It's literally telling all the bulls, if you're long, get out of this because this is getting ready to go down, right? And then, boom, it's time to short. Is that coincidence? I don't think so. But the beauty of this is now we're seeing enough data that supports the seasonality trend that we're talking about, which says it's supposed to go down. Okay. And so go down, Sell short, sell short. Right now, today, it's telling you wait and hold. Why? Because at this stage, it's saying, look, we don't want you chasing this stock. If you miss this, that's okay. Go find something else. Because part of being successful is making sure that you don't chase a stock, right? You don't want to chase a stock. And so we factor that in there. It's like we do not want to chase stocks. If we didn't get in when we were supposed to get in, that's tough. We'll wait for the next one. Okay. And so in this case, now it's saying wait and hold. So now anybody who's shorting this should just be doing what? Wait and let this thing, let's see how far it's going to go down. And based on the seasonality here, we should be expecting it to go down to sometime in September. And so the question now becomes, hey, how do we manage this? And this is what we do. Just come back every day and just see what does the platform tell us up until September 3rd. If something changes between now and then, where data is now surfacing that says, wow, it's ready to go back up for whatever the reason is, the beauty of that is we know and have confidence that the platform will see that and say, hey, exit your short position, place a stop on your shorts, getting short on your short positions. It would tell us those things so we don't have to be guessing, hoping, or wishing. And that, ladies and gentlemen, to me, I don't know any other platform that can do that for you out there. And this is, again, how we were able to time the type of stocks we got into, when we got into it, making sure we could get out with decent profits over and over and over again. The only thing I tell people is like the challenge we faced was that we did not have enough money to buy the amount of opportunities that we saw out there. Okay, there were so many of them, but we just could not buy them all. All right, so let me end with a couple more. I want to show you this one right here. This is one that is literally setting up right now, saying that we should be ready to do this. I want you guys to look at this section right here, okay? And what you see here is that it's saying, look, for the last 9 years, this stock has gone up 9 times out of 10, 9 times out of 9 times, okay? So that's good news to know. I can see on the date that we see up here, see this date up here? It says for the next 28 days is what this is supposed to do. So over the next 28 days, in the past 9 years, this stock has been profitable. Now we can see in 2016 that, it wasn't a lot of money, but that's okay. It was still profitable, right? Some years had more than others. So the question is, do we want to get involved in this stock or not? Because this is supposed to be happening as we speak right now. Okay, so let's go and see what the chart is telling us. All we have to do now is, I now know that global payments is supposed to go up between now and the next 28 trading days. Let's go and see, which is pretty much almost, between now and middle of September. We go here to the charts. Look at what we see, ladies and gentlemen. This is live right now. This is currently right now. This is exactly how we will be dealing with this right now. Okay. And I'm seeing this. The first thing is the mere fact that this is still bearish tells me don't buy it today, Wally. Do not buy today, George. Okay. We do not want to be getting involved in this just yet. Some people will say, oh, this is a double bottom. Maybe it is. But I'm saying, Steve, nope, don't do it. Wait till tomorrow. Let's see if this will turn bullish. Because if it doesn't, this could ease. I mean, it's even quite frankly, it's actually broken that, and this could actually lead further down. And so here's a stock that has done this 9 times in the last 10 years, never failed. Okay. And maybe it's going to come back by next week or so. We don't know. We got 28 days, 28 trading days, which is about, again, give or take roughly 40, 45 days before this. So maybe it's going to come back. We don't know. But what I am saying is today is not the day to buy this. That's definitely for certain. Today's not the day to buy this. Does that make sense? And so because of that reason, we'll keep ourselves from jumping into a trade like this. And then the last one I'm going to show you, we ran out of time now, is this one right here. Another stock where, again, we can look back here and say, for the last 9 years, this stock has gone up 9 times out of 9. Great. Excellent. All right. Now, what do we do with this? Should we be looking to buy this right now? Should we not be looking to buy this? Okay, let's go here to the chart and look at what we now have, lo and behold, a buy cover. This is exactly what I'm talking about. So I have two stocks that both have seasonal patterns that have never failed in the last 9 years. But one of them is giving me all the right data that says this is getting ready to go, where the other one's still telling me, no, it's not. Can you see how this helps us now? And I'm not worried because every day for the next 28, 30 days, whatever it might take, I can literally just keep on coming back to this and saying, what is it telling me to do today? Should I place a stop? Should I not? Okay. Should I get out and insure myself? Should I not? Should I just wait and hold and do nothing? If it says wait and hold, that's great. I just sit back there. If it says buy tomorrow, that means I can buy more. If something was to happen to the stock tomorrow and says, look, it's ready to go down because new information has surfaced and it's ready to go down, well, guess what we do? We can know this and take action. No more guessing. Okay? No more guessing. All right. So again, there's a lot more that I would like to show you. I haven't even gone through the screener, but we've run out of time. I can show you the screeners, how we can find some of these stocks and stuff like that. But for time's sake, let me just jump to the presentation and end this by saying, look, I would like you guys to give it a shot. I want you guys to come test it out. We put together a special offer for you guys simply because, again, you guys were in our database. That means that you were somehow with us at one point in time. You interacted with us at some point in time or another. If you go to our website right now, it's $2.99 per month for this platform.